The important question whenever we speak about Islamic finance is, why is the element of interest as applicable in the conventional banking model prohibited, or why is it haram? Interest is haram because of various reasons. However, I'll just summarize it, or I'll just focus on two main points. One is because interest is considered as taking advantage over the person who is in a financial difficulty. Whenever a person goes to the bank to borrow money, it is because of valid or pressing reasons. Let's say he wants to finance his education, his health, his marriage, or even to purchase certain necessity item, for instance, car or home. So whenever the customer doesn't have sufficient funds, he goes to the bank, he applies for a loan in order to facilitate the purchase or the use or the purpose that he intends to use. Secondly, interest is prohibited because it's a form of making money at a very low risk environment. What you only need is a big pool of amount of money, and then you lend it to the borrower who does not have that capacity, and then you expect the repayment of that amount over the period of time. So it's making money out of money over a period of time. So in a sense, the rich will become richer and the poor may become poorer. So interest is mentioned a few times in the Quran, whereby it's mentioned as Englishly translated as Allah permits trade but prohibits riba. Riba here means interest. So the question is, then how does Islamic banks make profit out of their business activity? So the only form of lending which is permissible under Islam is called Qard al-Hasan, which is a soft loan, an interest-free loan. So whenever the borrower wishes to borrow money from the lender will give the capital or the principal amount, let's say 1 million, and then the borrower will have to repay that principal amount without any additional amount imposed or attached to it. So lending 1 million, repaying 1 million. If let's say the argument comes saying that how does banks make profit? So banks are allowed to make profit, however it has to involve the real economy. So under Islamic banking, products are offered, for instance the product of buying and selling. So the bank may be able to make money out of the selling of a property at a markup price, or which we call a murabaha. So this is a difference between conventional banking and Islamic banking, whereby conventional banking, they make money out of money, interest, whereas Islamic banking, they make money out of transaction.